viewers, I am Sanjeev Pandya welcoming you to the Tax Talk with Mr. AJ Kumar right here on ITV Gold. This is the weekly show that brings you the most important information that you need to know about your taxes, personal taxes or corporate taxes, what has changed, what are the deductions available to you and how you can take advantage to get maximum refund if it's possible. And for that, you can contact Size CPA Services, a full-fledged accounting firm based in state of New Jersey with multiple locations. You can give them a call, virtual calling, Zoom, Facebook, or even on the phone is all possible to help you out with the taxes. And Mr. AJ Kumar of Size CPA Services, with over 25 years of experience, comes every week with us right here in the show and gives us all the guidance and the knowledge that we need to know about taxes. So with that note, I'd like to welcome Mr. AJ Kumar. Good to have you, sir, again.
Thank you, Sanjeevji. I appreciate that.
Sure. Tax season is in a full swing now.
And, absolutely. It's getting there.
Yeah.
So the eye of the storm, that I call it, is between March 1st and March 15th. A lot of people are still getting those 1099 from Robinhood, from Fidelity, from TIAA, all those banks. They're still giving a lot of 1099s. So the personal taxes have started coming in. It's not in full swing yet, but the business taxes are definitely in full swing. When we are talking about it, we want our viewers to know business tax deadline is a month sooner than the personal tax deadline. All business taxes, those multi-member LLC, the S Corp, they're all due by March 15th as opposed to typical April 15th for the personal taxes.
Absolutely, that's true. You know, what you said is also correct. But by the time this episode is over, I'm sure you're going to get a lot more personal taxes. You know?
Absolutely.
When it comes to taxes, right, personal or corporate, the number one question I think taxpayers should be asking their accountant is that what are the changes in the year 2021 in the taxes than the previous year, you know?
Absolutely.
And especially as we've been saying every week that 2021 is the year that has seen maximum changes in the taxes rules and regulations and everything. So first question should come to mind to a taxpayer is that what has changed?
Absolutely.
Where can I get more refund? Is there any credit available? Because it was a, let's say, you know, it was a very different year. It was a year of experience, that we experienced so many things, and taxes are not immune to that also because there were stimulus packages, there were child tax credits, advanced tax credits and whatnot. So this is what we're going to discuss, viewers, in this episode. What has changed in the year 2021 when it comes to taxes? And I just want to let you know this is going to be a two-part series. So after this episode, next week's episode, we'll have a continuation on this topic as well. What has changed in the year 2021? So Mr. AJ Kumar, you know, according to you, what is the major thing, the first thing that we can start about the changes in the year 2021?
Absolutely. Let's start by letting our viewers know that knowing what you know is very important when it comes to taxes. And please remember, if you miss a credit, IRS is not going to send you a letter telling you, hey, by the way, you missed this credit. Can we give you more money?
Oh, they don't do that?
Absolutely not, sir.
Why not? They don't have enough staff?
Absolutely. So the way the system works, the onus remains on the taxpayer. It's taxpayer's responsibility to claim the maximum credit potentially that applies to you, to claim maximum deduction possible that applies to you. So that being said, it's your responsibility to know what's applying in your case. What credits can you apply? What deductions can you apply? And knowing what changed compared to last year is very important. There are a lot of credits that were not there last year, a lot of deductions, they were not allowed last year, being the business, being the personal taxes. So we'll try to cover as much as we can in this episode, and then we'll try to carry this episode over to the next week's episode to cover as much as we can. But if any point of time you have more questions, please do not hesitate to write back to us and we'll be happy to help.
Absolutely. Let's move on. Let's talk about advanced child tax credit. This is the topic that you know, people with their families are talking about it, and this is to their benefit.
Absolutely.
Let's just talk about, you know, the what is advanced child tax credit and then the benefits of it.
Absolutely. So advanced child tax credit is something new that has never happened. This is new for 2021. You have to know what you're getting into. A lot of people who had children they were getting some money from IRS every month. On the 15th of the month, IRS will either deposit the money into their account directly, or they were getting a check. For 6 months people got the check. The way the IRS was calculating these checks based on how many dependents you had in 2019 or 2020, depending on whatever the last tax return you filed, IRS was computing any child under 6 years was qualifying for $300 a month to a maximum of $3,600 for the year, and any child between 6 and 17 was qualifying for $3,250 a month. So in total, 2 children, 1 under 6, 1 over 6, $550 a month. And this amount was paid to both spouses separately. It wasn't really a single payment. In a lot of cases, people saw 2 different payments going into, or 2 different checks coming to them. IRS is issuing letter 6419, reconciliation of these payments to both spouses. So you have to know how much money you collected. You can also go back to your bank statement, see how many checks you deposited. Most people got 6 checks from IRS. So most people got half of the credit that they were allowed to claim during the last year. If you did not have that credit, you have the right to claim this credit at the time of filing the taxes.
Okay, interesting. How does the child tax credit affects taxes?
Well, that's a great question. It's a credit, it's not a deduction. Let's say if you owe $2,000 to IRS, and if your child tax credit happens to be $3,000, now IRS is expected to give you a refund of $1,000. The tax credit offsets your tax liability dollar for dollar, and whatever the additional tax credit you have is supposed to be refunded back to you. It's not a deduction, it's a credit against your tax liabilities.
Okay, it's not a deduction. That is the one thing that viewers should make a note of it. It's a deduction, but again, it's to your benefit. I mean, whatever it is,
definitely.
It's not a deduction, but it's a credit. And how much can you get per child?
Well, it depends on the child. If the child is under 6 years old, maximum you're allowed to get $3,600. Just because the payments were divided monthly, so $3,600 divided by 12, $300. So most people got $300 on the 15th July, 15th August, 15th September till 15th December, 6 payments. So most people got $1,800 in advance, and the remaining $1,800 can be claimed when you file your taxes. Similarly, if the child is between 6 and 17, the maximum credit is $3,000. IRS was sending $250 a month for 6 months, so you already received $1,500. You can claim the remaining $1,500 when you file your taxes. If you missed a payment, or if for any reason you did not get the payment, you have the right to claim the whole credit at the time of filing the taxes. Let's take an example. The good example is, what if I had a child born in 2021? Since IRS is computing these payments based on your 2020 or 2019, whatever taxes you filed last, and in 2020 you had no children. Now you have a child. So based on IRS record, IRS did not make any advance child tax credit payment to you, but you deserve it because you have a child. Then at the time of filing the taxes, you will say the total credit allowed $3,600 because the child was born in 2021, so the child is under 6 years old. The total credit allowed is $3,600. Credit received is 0, so you will get $3,600 back. And also, please understand, even if the child was born on December 31st, the last date of the year, you still have the right to claim the full year's credit. So please do not miss it.
Interesting. One more question before we go into the break. Is there income limits for a tax filer to be eligible for the advanced child tax credit?
Absolutely. There are phase-out limits. So the way the government is looking at, if you are not making enough money, then you need the money more. And it's all IRS definition based on the CPI and whatever metrics they use. So if for a single filer, if your income is less than $75,000, then you have the right to claim 100% of the credit. For a married filing joint taxpayer, if your income is less than $150,000, then you have the right to claim 100% of the credit. And then if your income increases, then the credit starts to phase out, meaning more income you have, less credit you have. But for most people, married filing joint people, in income under $150,000, you are expecting 100% of the credit. 50% of the credit should have been paid to you in advance. If you did not get 50% or if you got less than 50%, please do not forget to claim the remaining credit while you file the taxes. Make sure your numbers matches with 6419 form that IRS is sending. If you did not receive the form, you can create your own personal login profile on IRS website and download the form 6419 as how much child tax credit in IRS books you received.
Now, continuing our discussion in this episode, what has changed in the year 2021? Before we go further, question is, do I need to file taxes? That is the question. Why do I need to file taxes? Is my income enough? When someone comes to you with that question, what do you tell the person that what kind of income that they should have, or what's the limit of it, and why should they file taxes?
Well, absolutely, that's a great question. Not everybody in this country has to file taxes. So if you look at the standard deduction, and if you are a single filer, if your income is less than say $12,550, that's the standard deduction limit for a single filer for 2021, then you do not need to file the taxes. Similarly, if it's a married filing joint situation, your income is less than $25,100, then technically you do not have to file taxes. But here we are talking about the child tax credit, Sanjeev ji. So if you are not required to file the taxes and you have a child, by filing the taxes, you can get the advanced child tax credit. You can get few $1,000s back from IRS only because you're filing taxes. So what we advise to our viewers, even if you are not required to file taxes. So just because you're not required to file taxes, it means you have lower income. If you have lower income, not only you can qualify for advanced child tax credit if you have children, or you can get other credits, low income credits, earned income credit. There are a lot of credits, lot of benefits, especially for people who are not making enough money. So if you are not making enough money, all the more reasons for you to consider filing the taxes. It's good for your tax history as well. Not filing the taxes for several years does not go well. If you are buying a home, if you are trying to get a loan, they all request a tax transcript. So we typically request our viewers to see, even if you are not required to file, please consider filing the taxes, Sanjeev ji.
All right, but that doesn't apply to retirees. If they are retired and living on a Social Security income, and if their income is, let's say you mentioned $25,000 number somewhere, does it apply to retirees also living on a Social Security income?
It applies to a lot of people. It does not apply to self-employed people, since you brought it up. So if you are making more than $400 as self-employed on 1099, then you must file the taxes. A lot of retirees are not required to file taxes. You don't need to, unless you are thinking about investing somewhere, unless you are still actively pursuing taking loans. You don't have to file taxes. A lot of people choose to file taxes not knowing how the life is going to turn around. So just by filing the taxes, they want to keep the history clean. If the need be, they will have a proper tax return transcript for the last couple of years.
Very good. Now let's help me to clear this myth. When they are not required to file taxes, we're talking federal taxes, right? What about state taxes?
Most states will follow the similar rule that the federal government is following. So state of New Jersey, state of New York, they all follow the similar tax bracket. If you are not required to file taxes with the IRS, more than likely you are not required to file the taxes with the state as well. But please understand, if you are self-employed, if you are a consultant, if you have a 1099 NEC, you must file the taxes if you are making more than $400 on 1099 NEC.
Okay, good point to know. Now let's come back to the topic, the topic of our episode today. Tax changes in the year 2021. Before the break, viewers, Mr. AJ Kumar gave out as much information possible on the advanced tax credit. So that was very helpful. Now my question to you is, what is recovery rebate credit?
Absolutely. So if you remember, under COVID-19, a lot of times the government was giving some money out to everybody, all the individuals, especially people who made less than certain amount. In 2021, there was a third phase of recovery rebate credit. We call it economic stimulus payment. A lot of people got $1,400 per person. If you have a child, you got $1,400 for the child as well. So husband, wife, one child got $4,200. So if you did not get that credit, you have the right to claim that credit along with filing your 2021 taxes. There is a form, 6475 form, that IRS is sending to everybody, reconciling how much money IRS paid to you for this economic stimulus payment, recovery rebate credit. If you did not receive the form 6475, and if you are not sure if you really received the payment or not, try logging into IRS website, create your own profile. It's just a one-time effort. You will have a login password. You can see how much money IRS is showing in their record that they paid you. If IRS did not pay you anything for recovery rebate credit for economic stimulus payment, you can claim this payment when you file your 2021 taxes.
Okay, very good. Is it all taxable?
This economic stimulus payment is supposed to be tax exempt income for you. If you receive the money,
nice.
you're not supposed to be including this income as a taxable income for you. So the whole 4,200 in our example, husband, wife, one child, $1,400 for each person, all of it is supposed to be non-taxable to you.
Okay. Now, while you're giving out all the information, a question comes to my mind about income phase outs.
Okay.
How does income phase out plays a role in the 2021 taxes?
Absolutely. So income phase out formula changes year after year. This year in 2021, especially for economic stimulus payment, for a single filer, the income threshold is 80,000. So if somebody's income is less than 80,000, they will get the full $1,400. For a married filing joint taxpayer, if the income threshold is 160,000, if somebody is making less than 160, they will get the full $2,800. So if they're making more than this money, the economic rebate will go down for them. And if they are making substantially high, they will not get any economic recovery rebate credit. So depending on the income, if you remember in our first segment, we talked about advanced child tax credit. It was $75,000 for single, $150,000 for married filing joint. So once the income crosses certain threshold, the refund, the credit that you are getting, it starts to phase out, it starts to go down. And if you are making more than a substantial amount over the threshold amount, then you don't get anything.
Okay, very well. Before we come to an end of this episode, as I just want to let viewers know that tax changes in the year 2021. This is a two-part discussion here, and this is the first part. Anything else you'd like to add in this episode?
Absolutely. We want to remind our viewers, a lot of things are changing. In this episode, we have only covered two things. Donation is changing. Now, donation does not have to go through Schedule A as an itemized deduction. A lot of people are not itemizing their taxes, especially in New York, New Jersey area, when the SALT limit is 10,000. Even if you own your home, if you don't have mortgage, you will not qualify for itemized deduction. In those cases, it's very important to maintain certain donation receipt up to $600 for a married filing joint tax return. You can claim the donations above the line without even itemizing the deductions. Similarly, the standard deductions are changing. The income tax brackets are changing. You really need to understand what's changing in your situation. Again, as we started, IRS will not come back to you to say, hey, you forgot this credit. The onus remains on you to claim the maximum credit, to understand the tax rules, the tax laws, and do the best in your situation.
Okay, so besides donation, anything else like standard deduction?
Absolutely.
And a couple other pointers that we can just let our viewers know so they can look forward to the next episode?
Absolutely. So the standard deduction for 2021 is $25,100. What it means is if your itemized deductions are less than $25,100, and itemized deduction includes the medical expense, property tax, which is limited to $10,000. It includes the mortgage interest, the donation. If these four numbers added together are less than $25,100, you are better served by using the standard deduction. Similarly, there are several income tax brackets. There are 7 income tax brackets in total. The lowest income tax bracket starts with 10%. If your income is less than $12,550, you probably don't have to file the taxes. Once the income is over $12,550, you have to start filing the taxes. The minimum tax bracket starts with 10%, then it goes to 12%, 22%, 24%, then 32, 35, and maximum tax bracket is 37%. So depending on your income tax bracket, depending on how much income you have, for a married filing joint taxpayer, If your income is more than, let's say, 647,000, you would take $650,000, then you are in highest income tax bracket. Also, Sanjeev ji, we want our viewers to understand, it's not that if your income is 650, you have to pay 37% on all of the income.
Absolutely,
What
yes.
it means
Good
is,
point.
only in that segment, if your income is $700,000 in our example, only the top 50 is at 37%. It's a weighted average formula. The first 10,000 is always going to be at 10%. So 10%, then the 12%, then 22%. We calculate the income based on the weighted average formula, and there is a much lower effective income tax rate that you get. It's not that once you cross certain number, all of the income becomes taxable at 37%.
Good point. That's a very good clarification. All right, as we come to an end of this episode, Ajay ji, I just want to ask you one last question.
Please.
What is your cell phone number?
Absolutely.
No, I'm just kidding. The reason I'm saying, because the way you're giving out all these numbers and percentages, and this one is this, and standard deduction is this, and advanced tax credit, it's just simply amazing. No wonder viewers, why Mr. AJ Kumar of Science CPA Services is the best in what they do when it comes to personal and corporate tax filing, full-fledged tax filing firm. That's a Science CPA Services. Thank you for watching the show, Mr. AJ Kumar. You have a good week ahead. When we meet next time, same place, same time, we're going to actually continue to discuss update tax changes in the year 2021. I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. So long.